Good evening. It's quite an interesting conundrum that Greece is going through right now. And the size of it, I think, is what distinguishes it from many of the other countries. But this crisis, from 2007 onward, has created this issue across Europe, across the US, across Latin America. This is not unique. And the learning that has gone on since this all began has been really pulled together and is being leveraged by the Greeks to try and resolve the situation. Today, you can go online and you will find think tanks, investment banks, the EU, the European Stability Mechanism, the Hellenic Stability Fund, the Vienna Initiative, which is an initiative that EBRD started, all publish what needs to be done to create a proper framework and level playing field for these issues to get resolved. The studies include things from the legal system, the judiciary, the tax regimes, the market conditions. Can you actually sell a loan? Are you able to service it and transfer the asset? And then general governance of the banks working with the authorities and to really find a way to get everything delivered so that the framework enables the banks and the market to work through the problems. Greece has done a lot. If you look at, and actually the best thing to look at is the Hellenic Financial Stability Fund, because it really sets out where everything stands. And a lot has been done, a lot is being done. But I think all I can urge is that this get done faster. We have to finish the framework. We need a proper means under which the banks are able to work out the problem loans. So we have to keep it going, we have to accelerate it. But in fairness, a lot has been done. Once the framework is firmly in place, and the banks are already doing implementation, they have to, but the implementation will be easier and we'll be able to see a faster execution. I couldn't agree more with my colleagues here that this is a question of time. You need time, you need economic growth to work out the very end of it. But from the banks, if they're able to sell the assets that they feel that they're either too numerous to work out in terms of scale, that frees up the time for the banks to be working on the ones they can fix, and indeed to start looking at investing in the economy again. Some of the challenges as we look at implementation are, to be honest, as vast as changing all the legislation. There is a real sense of what is the right price when you're selling a pool of assets, of loans, particularly when you start looking at valuing the collateral. And so there's an unrealistic pricing gap sometimes between the sellers and the buyers, and that gap has to be closed. We often find that the loan documentation, the collateral documentation is weak, and therefore it's hard to have full faith as your ability to actually collect under them. So the issue of data quality is there. There's the legal capacity in the country. There's the ability of the banks to have sufficient high caliber corporate workout people and staff to work through the problems and do the restructurings. And then there's just the challenge of getting investors to believe enough that this will work and therefore the assets can be sold. Turkey, for example, has a very active secondary market for NPLs, and the banks regularly sell off part of their non-performing loan portfolios into the market. They have a very active investor base. And that enables the banks to lower their NPL rates between 1% and 2% at least on an ongoing basis. So as long as the investors are there, the market's there, they have found a way to manage it, which frees up management's time to do more productive aspects of growth and financing the economy. EBRD has been working on this really for a very long time, because when we go into our countries and start operating, we do a review of the legal system to ensure that we're comfortable we can actually enforce collateral, that we can actually document what we need to have. And we work to create credit registries and other things that allow us to help improve the overall framework for lending. When the crisis happened in 2007-08, we actually spent quite a bit of time. We created something called the Vienna Initiative, which was geared originally to keep the foreign banks in the markets in the countries they were in. And we've now created a special working group around 6 countries in Central Europe on the NPL situation. So we've now, most recently, what we've done is we actually did help. We've invested in the 4 systemic banks here in Greece on the equity in one of their recapitalizations. But we've also put in place for all of our regions a non-performing loan investment facility. And that will enable us to put equity into servicers, into SPVs that have the portfolios, or to help work out large corporate loans in restructurings. And in this case, what we're hoping we'll be able to do is provide confidence to investors that if we're investing alongside other people, it will help attract more investors and therefore give more scale to the markets. So I think at this stage, the key thing that we really need to do is give the banks the time to work through and to start working through the individual credits. And I know, having spoken to my colleagues here, that a lot of that work is being done. Clients that are viable but need time because the markets are slow and we don't have the growth have had their loans extended, and those extensions give them time to see the markets recover. But they're good companies, they have a good EBITDA, they can pay their debts, they just can't pay them at the originally contracted structure. And then you have groups of borrowers who are perhaps viable, but not in their current state. It could be that the debt is too high, or that their market and their business has changed and it needs fundamental restructuring. And I think this is a group which is the hardest to deal with, because it means somebody has to have the skill set and the time to really work with these clients, look at their structures, change the management, maybe sell off part of the business, but it's a more complete restructuring of the group. And that ultimately can, but not necessarily always, mean a write-down of some of the debt. But the key thing that we have found in our workout experience over the years is that inevitably you look at management and whether they're capable of transforming the company. And if not, you need to change the management. You have, I think, here in Greece, the framework that exists around the requirements to repay debt. The system actually facilitates non-payment. So there are a lot of people who could pay, but the system doesn't really incent them to pay. So I think those we'd really need to face that issue and figure out how we can sort that out. And I think the incentives need to be there, or we have to remove the framework that allows them to think it's okay just not to pay their debt. And there is, I don't know how big of a portfolio that is, but I'm sure that there's enough of that. And then there's the last bit that you will not be able to work out. The businesses won't work, the economy's not growing, they just don't have a product that can sell anymore. And for those companies, we need to look at a liquidation framework. So I think that there's very different things that need to happen with different client sets. But if we don't get the reform structure and the legal framework, the tax structure, for example, if I want to settle on a partial restructuring of a deal and forgive debt, in many countries, I believe it's still true here, you're actually taxed on that as if it were a profit. And that's a disincentive to fix the problem. So those types of things are there, they're recognized, they just need to be fixed. So there's a lot to do. It will take time. Thank you.
Thank you very much, Betsy, for your insights and for bringing your experience to the table. I know we're already late, so I can open the floor for maybe one or two questions if you have something to ask. Can we have a mic, please? Mic is coming.
Μ' ακούτε? Ήθελα να ρωτήσω σχετικά με τις τιμές των ακινήτων που εκπληστηριάζονται. Δεν έχει ξεκινήσει ακόμα ουσιαστικά η διαδικασία των πληστηριασμών. Τώρα ξεκίνησε, είχαμε μια κανονική, ας πούμε, ημέρα πληστηριασμών την προηγούμενη Τετάρτη.
You have to use a mic for
So I would like to ask you about the prices of the properties that are sold through the e-auctions procedure that has just started. So what will happen if the market is flooded with properties and the prices go down? How this will affect the assets of the banks, the balance sheet, and what's your feedback so far by this the auction procedure? How the prices are going? Thank you.
I guess the bankers at the panel have their say, so.
Thank you for that question. It's a very good question. First of all, there's very little experience as yet of auctions. The price of an auction is set at the time of the confiscation, κατάσχεση, which is about 8 months before. The first auction will be at that price. It's set by an independent valuator at the time of the confiscation. And if there's no successful bid, it applies for the second auction, 2 months later. Only in the third auction can you petition the judge to bring down the price, and it is of the order of 20% in the auction. A few auctions have occurred. Hopefully they will increase that. Now, given that this will take most auctions to the third round, and that is quite time-consuming, and as you know, the banks have NPE targets to meet, what banks are probably going to be doing, certainly we will be doing, and I think the other banks have similar strategies, is we will be the first buyer on the first auction at the market price, which hopefully is truly a market price and not a too high a price. This is not a long-term strategy. It is just so that we can get auctions done, and we think the value of having done auctions and sending the signal to people who are tactical defaulters that that they will be losing their homes or their properties if they're commercial, is a very important signal. So initially, there will be no downward pressure on prices, to answer your question, because the banks will be buying at the initial price. Once the market gets more solid, I think then we'll allow the market to clear.
George? Okay, so one last question, please, gentlemen.
Michael Jacobides, London Business School. One of the things that was very politely covered by the panel, especially by the last speaker, is the fact that we need to change the regulatory structure. Whenever we speak about restructurings, whenever we think about the extent to which people comply, both the stick and the carrot, to use Mr. Milonas's points there, are needed. And whereas the carrot can be found, the stick will always be a function of either the corporate or the individual alternatives that are faced, that are enshrined in law. And it's clear that what we've got is not working. To what extent does this panel think that, first, the various banks will be able to come together with a view, perhaps through the Greek Bank Association, that is fairly clear, and B, that this will be pushed either by the creditors or, perhaps less likely, by the current government?
Feel free.
That's a question that can get me into trouble. Clearly, first of all, I think you're simplifying the fact that it's easy to give a carrot. The carrot is much tastier, larger, whatever you want to use, because now we have the provisions. 3-4 years ago, we couldn't give these carrots. So now that we do have the provision in the capital, we can give far more generous products. So the carrot is a newer part of the strategy as well. Now the stick is hopefully following the e-auctions or auctions in general, in no matter what form they take, is a very important part. But that helps only on liquidation, and you don't want to be liquidating half your loan balances. You want to do restructurings, you want to change management, and here it's a question of the slowness of the courts, and we can discuss it, but they need better trained people who know commercial law, who have common sense, there are more of them, and we need things to move quicker on the judicial system in general.
So thank you very much, everyone, for your time and patience, and it was a really interesting panel. My thanks to the speakers, and we shall meet again tomorrow morning.